Good afternoon, guys. Everybody hear me okay? Ninja came out with another patch, 15.1, yesterday. And was it yesterday or the day? I think it was yesterday. And Jeremy uploaded a new version of the Blackbird beta yesterday as well. And in that update, it not only fixes the compatibility issue with NinjaTrader 8.0.15, but he also included a fix for a problem I was having in some of the other templates, some of the previous templates where, let me just show you real quick. Let me see. I think I'll just make a new solver. Let me just kind of explain this because this is it's a pretty big, important fix. So some of you will probably remember when I was explaining this the first time, the first webinar, which would have been the 25th, I think. 26th. Yeah, July 26th. I was talking about how I was accessing the values of these lines here from the 3-minute chart. And these lines are created from the low of an extreme spike in the volume or relative volume, and then from the high of an extreme spike at a high in the relative volume or volume. So I was having a problem accessing those before because the displacement in the comparison solver was not functioning properly. It was giving some sort of a null error. So now I'm just going to show you this in real time right now. So before, remember, Bloodhound, Blackbird, always on this chart on the right. I'm going to color this a different color for the workspaces I send out Monday. But always on row 1, Bloodhound or Blackbird. So I'm going to now use the bar from the chart on the right. This is the chart that Bloodhound is on. So I'll use the bar from this chart in indicator A. Let's say I want to use the high for longs. No, I'll use the low for longs, actually. High for shorts. And now I'm going to bring in the reader to check the values of the prices of these lines. The properties are still not showing the proper display names yet, but I think that's an easy fix. He'll probably have that next week, I imagine, with some other fixes. So that's the 3-minute chart. Huh. That seems to be different. If I remember correctly, I had to load it first and then open it back up and select the data series because of the way Ninja's handling the DirectX or something, or I had to click out of it and then click back to it. Huh, I wonder if it kind of seems like it's fixed. Their little drawing updating issue thing, but I can't be sure yet. So anyway, if we're accessing the price of those lines, that's an updating value, right? It's not a +1 for a long, -1 for a short, +2 for a long, -2 for a short or something. It's not a consecutive 1, 2, 3, 4, 5 or 1, -1, 2, -2 date, signal type of a setting in the data series. So it's an actual price. So we want to set that to last instead of extreme. Yeah, so I'm going to look at the upper range high, which is that red line. Okay, now essentially what it's doing Let me build the one for the lower one as well. This is the high. Actually, no, it's the low above upper range high. Right? Yeah, upper range high. Displaced by 10. Okay, I'm just going to get longs out of this one. Basically, what I'm doing with this is I'm wanting to see when we have a full bar close above that line. Okay, so in order to look at the previous bar, I have to set this look back to 2. And single value, yeah, because I'm looking, just, this is basically just a straight up displacement. This would be like a displacement of 1. It's a little complicated. I don't want to try to explain too much about this solver, but this allows you to do a lot of different price action conditions just built in directly into the solver. You don't have to bring in, any SMA. You don't have to bring in that chameleon indicator, which lets you look at different data points on the bar. I mean, unless you're trying to do multiple time frame stuff, but I don't think that's been fixed yet, the multiple time frame issue. I'm sure that's the next thing that he'll include. All right, so just a simple displacement, which means I'll set this to displacement of 1. So I'm waiting for a full bar to close above that red line. Whoops, for a long signal. And yeah, this is why oh no, that is a full bar right there, isn't it? Yep. Yeah, I guess that's fine. And then I would, only be looking for longs beyond that. This is just a simple kind of well, it's not so simple, I guess, but it's a basic kind of a setup for a trend condition. So I'm just going to go ahead and show you this now because this was a major fix here in Bloodhound. All right, so I'll copy that and add it. And for this one, we're going to look at the high. And this is the lower range low. I gotta flip these. Now I'm looking for a full bar to close below that green line, which means I'll be looking for the high of the bar to be below it. And this is shorts only. And setting this to lower range low. High is less than lower range low. Yeah, so right there. That's where we begin seeing a full bar to close below those areas there. Okay. I'm just kind of checking this out to see. That's yesterday. No. This is yesterday. Oh, yeah, I always forget they have this. This is a great little addition here. I've been wanting something like that for a while just to show you the date range that's in view right here at the top. And that's just a setting here in the properties. If you haven't already, you should go through and check out their NinjaTrader 8 user guide and just go through all the different sections in there, and I don't know, take you maybe 2 hours to read it all. Pick up some of these little nuances. All right, so what I do with this then is use an OR node. Hang on a second now. Yeah, that's right. I can get really complex with this. What I was doing before was looking for a full bar above both of them. Let me just show you what we could do with this, because this is a pretty useful rule here, or rule set, if you will. I know this doesn't necessarily pertain to all of you, but if any of you are interested in doing this type of stuff yourself, developing out some of these different templates and rule sets and whatnot. What I was doing before was looking for, say, a full bar above both lines. So I would be getting, I think I had to have 4 of these if I remember right. Yeah, low above this one, and then low above this one. Okay. All right, so this is showing when we have a full bar closing beyond, or let's say above both lines. When we have a full low above both lines, it'll give a green. When we have a full bar below both lines, it'll give shorts only. Okay, so that's just one little way to attempt to view the trend just based on volume together with swings. And then what I would do from here would be to use a toggle. I'll include this in the templates I'm sending out, the workspaces on Monday. And then you just force it on until the next signal in the opposite direction. And then you force that on until the next signal in the opposite direction from that. Okay. So before, when I would do this and then reload it, it would throw those errors and it would say null. I don't know, something about dividing by 0 or something, some kind of null reference. So that's been fixed. So now I can do some of these more intricate types of things with the trend and whatnot. So that was a huge, huge fix right there. I know that's, for some of you guys, this is a little bit over your head, but that's a big improvement. And I think with that, actually, I'll have to test this some more, but with that, let me just think for a second. Yeah, I can beef this up quite a bit now. I was going to say I don't necessarily have to have it split into both real time and back testing, but yeah, I still have to do that. It'll still have to be split up. So let me just explain that a little bit. So the way that I've split this up, because the readers are, everything is, completely real time, and Bloodhound is running calculate on each tick, you have to use one template for real time and then another for historical. And the only difference between the two is that right there is not in the historical version. Okay, I did have them split up onto 2 tabs here, and I think that's probably fine, but I thought I was running into some sort of performance issue, and the performance is actually the lag that any of you may see or that I'm seeing is something going on with the reader manager, I think. So just to show you something real quick, and he's looking into it to try to nail down exactly what's happening. But in Ninja 7, we have, it's weird. It's like the stuff that we had access to in Ninja 7, now we don't have access to in Ninja 8. The stuff that we didn't have access to in Ninja 7, we now have access to in Ninja 8. So it's like a kind of a 50-50, some things it's great to have those, but now we've lost other accessibility. So in Ninja 7, we could see very easily all those other data series from our indicators from other charts and then from any other indicator. But now, because of the threading, it's not as easy to get that information, to get the data series from the other charts. So we have to use reflection to get it, which evidently makes it take a little bit longer to get these readers to resync up through the manager, which should be the other way around. So there's something strange going on there. Let me just show you what I mean. So when you first connect to your data feed, so you open up NinjaTrader 8, you connect to the data feed. When these charts finish loading, all of the readers that are accessing the chart that you have the readers on, let's call this the reader chart. Okay, this is Bloodhound. All the readers are inside of Bloodhound on this chart. So this is the reader chart. All the readers inside of Bloodhound that are accessing this reader chart will show up in here as being disconnected. Okay? So you can either reload the chart by tapping F5 and watch how long it takes. This is NinjaTrader 8.15.1, and they've added in this recalculating here, or calculating text, you'll see. So I'll tap F5 now. It says it's calculating. I think it takes about 10 seconds. Cycling through all these readers, reconnecting everything. And there it is, and it's done. And now it's reconnected, and everything's fine. Okay, and this is the faster and better. It kind of works a little bit differently, but in Ninja 7, it's very fast. You click the Recalculate All button, and it does the same thing, but much faster, and it just kind of reassures the connection, or how should I say that? It makes sure that the connection is solid, stable, and that the readers will not become disconnected. Okay, so you start up Ninja, connect to the data feed. You click, after the charts have loaded, you click Recalculate All, and then you're done. You can just minimize that until the next time you start up NinjaTrader 8. Okay, but here, now, if you hit that Recalculate button, if it's just one workspace, it can take about a minute. For some of you that have slower computers, maybe it takes a minute or two, which is pretty weird. So anyway, long story short, it's like, nothing's broken or disconnecting or anything like that, but it shouldn't have to take a minute to perform what it's doing. I mean, really all it's doing is reading the data series. There are no calculations going on. It's It's not like it's a true indicator. It's just literally a connection, and that's it. So I'm kind of thinking it may have something to do with this percent required property, because I don't remember this being an issue before I added this. And this is, purely for back testing. So it may have something to do with that. But anyway, so some of you guys have noticed that it takes, a little while to load after you click that recalculate button. It does. I mean, that's the strange thing that's happening right now. So anyway, he's looking into it, and probably have a fix, like I said, Monday, maybe Tuesday. All right. Any other questions before we roll along here? Yeah, it is necessary, but it opens automatically and you don't really have to worry about it. So you don't have to, it's purely for the readers in Bloodhound. Are you using Bloodhound or Blackbird, Mark? Yeah, so all you have to do is simply let it open up. If you close it, then it'll open up the next time you reload. All it is a connection. It's nothing you really need to operate or worry about. You just have to leave it open, so you wouldn't want to close it. All right, so now that I'm done explaining the reader manager issue there, let me explain the templates a little bit. So I have 4 charts that these are accessing. Bloodhound and Blackbird are always on this row 1. This is the fastest one. And I have, looks like 11 solvers for each of these charts. I'm not using all of them, but I just went ahead and made them so that you guys could, have a starting point to easily design your own stuff if you wanted to. So I've got 11 different solvers for each chart. Excuse me. So that's 44 just with the volume analyst reader in it. And then those are each looking at either the spikes, which are the drawing objects. Those are the extreme spikes, yellow objects, diamonds, major, which is white, and then the dark blue, which are the minor spikes. Some charts won't have those minor spikes turned on. And just to real quick show you, if you do want to turn those on, those settings are right here. Which spikes to calculate. For some charts, I just have it set to extreme and major. Just depends on what you want to allow there, but none of the minors are built into the Bloodhound templates. So spikes, and then the 2-bar patterns, and I kind of have this in I wouldn't necessarily call it descending order, but I don't know, for lack of a better way to describe the order of this, it is kind of descending. So we have extreme spikes, then major. Then we have a 2-bar pattern that has to start with an extreme climax. So let me give you a couple of examples of that really quickly. Well, let me start with this one since this one is right there. So this is starts with just a simple climax, or whatever you want to call it, a normal climax or major, if you will. So that's a smaller climax here. And then this is a larger climax signal right there. It's stronger relative to the preceding several bars. Okay, so that's extreme climax in the light, kind of a cyan color. and then that's a normal climax. Okay, so this would be a 2-bar pattern. It's a churn bar after a climax, but it's not as strong of a signal as that one is, which is a churn bar after an extreme climax. Okay, so that's what those two right here are. So this one has to start with the extreme climax and then churn or extreme density churn or extreme churn. Okay, so any extreme climax followed by any yellow bar on top or any one of these, which is extreme churn. So a huge amount of volume per range relative to the preceding several bars there. You can't see my cursor? Han? Can you guys see my cursor? Let me turn on a thing. So if I'm explaining a bar, I'm going to drag it to the right of the chart so that you can see the text right here. This is the text alert. So anytime I'm explaining a bar or a signal or anything from the lower panel, I'm going to make it to where this text alert appears right here. So that's extreme churn. There are two types of churn. Normal churn, which is right here, which is high density churn. What in the world? I don't think I've seen that before. That's a weird one. For some reason, the text alert was showing that as a climax when it was a churn. Pretty odd. Some strange drawing stuff in this. That's... Huh. Well, I'll have Josh look at that. I haven't seen anything like that before. Okay, so let me just find a better one here. So that's a churn bar right there. It's just a normal high density churn. The next signal stronger than that would be an extreme density churn. Okay, so a churn bar doesn't actually have to have higher relative volume, which is the skinny bar on top, the yellow bar. The fat bar is the density that's behind it. That's the orange. Okay, so relative volume on top, skinny bar. Relative density behind it, the fat bar. And we're working our way up. So you've got 3 degrees of churn. Okay, you've got this as the starting point. Every churn has to have high density or extreme density. Okay, and you can have high density churn, which is 1. You can have extreme density churn, which is 2. And this does have to have higher relative volume than the preceding bar. And the extreme density is such high density compared to the previous bars that it's well above the 3rd standard deviation, and it meets several other conditions, and the range of the bar has to be, noticeably smaller than the preceding bars ranges. Okay, so there are 2 in a row right there. So that's 1 high density churn. That's 2. That's extreme density churn now, but it's still churn. You see the total relative volume. Let me blow this up. Total relative volume is actually less than the preceding bar, but the range is smaller. So when you divide it by the range, well, it's a little bit different than this because it's relative density. It's not really dividing, not really dividing by the true range of the bar, but anyway, it's looking at relative volume per range. So kind of an internal calculation you don't really need to understand. But anyway, that's number one, and now number two in terms of strength. So that's extreme density churn, actually lower relative volume, but very, very high, much higher density than the previous bar. Okay, and then number three is this one, but let me find one all by itself. There's another little 2-bar pattern there. Yeah, I guess that'll work by itself. So that's extreme churn. It's also extreme, an extreme spike. Yeah, it's a huge amount of relative volume there. It's a pretty fast closing bar, though. It's a little less than 5 seconds. So closed pretty quickly. Most of that volume came in, pretty fast. Okay, so that would be the third degree of churn. So you've got 3, extreme density, extreme churn. 2, extreme density churn. And then 1, high density churn. Okay, so after a climax, in terms of climax signals now, you've got 4. Let me do the climax, and then we'll do the 2-bar pattern. So the weaker climaxes are darker blue or solid blue, slightly darker than solid blue. And then, so that's a normal climax, and then you have extreme climax right there, which is like a cyan color. Okay, so climax and extreme climax. Excuse me, they have several different conditions that go into it. They're looking at not just the volume, but the actual ranges of the bars relative to the preceding bars. So I don't know if that's written explicitly in the guide, but it will be, Jordy. But yeah, I think he goes in progression, climax and extreme climax. I mean, it kind of goes just, just by the names of them. You have a climax, and then you have an extreme climax, or you have high density, or you have extreme density. But here you have an extreme climax that is also high density. Okay, unlike churn, the climax doesn't have to have a high or an extreme density. But if it does, that means that even though it's a climax, it's such high volume, meaning that if it's a climax, it's typically a wide-ranging bar, and it's at least as wide as the previous bar. Extreme climax has to be, I think, at least 1 tick larger than the previous 2 bars. No, 4 bars, as a matter of fact. Without going into too much of a tangent here, let me just show you some of the different requirements here. You have, and this is going to be really beefed up in this 4.0 version I'm speccing out, which Josh will be working on next week. So here you have the 4. These are the 4 main bar code or paint bar signals. You've got extreme climax, you've got extreme churn, and you've got churn. Okay, we don't have any of this in Ninja 7. It's only right here in Ninja 8. So, I mean, we have a lot of these conditions built into Ninja 7, but you don't have access to them like you do here. So this, for extreme climax, it is requiring that it be wider. That's the range condition. You see you have 2 volume here, 2 volume conditions here, and there are a few others internally that I don't expose so that you can't disable them. And then you've got three range conditions. And then you have a momentum condition if you want to turn it on. Sorry, this is the momentum condition. This look back period, price, max, and min. Let me see if you get this cursor just right. I think because I'm running the webinar. It's a little strange the way NinjaTrader's doing these tooltips. You have to kind of hover your mouse over one of the properties for a second or two, and then you'll see the tooltip. But then it goes away before you have enough time to actually read it. So I'm not sure what we can do about that. I was thinking about maybe, well, I don't know, getting off on a tangent now, but it's kind of a pain that you can't click on a property and then see the description down here in the bottom. So just to kind of explain this one to you, and all four have this. They all four have the same property here. And if you ever see that, you know, there's a pretty obvious huge volume bar, but I don't have a signal, well, why not? This is probably the reason. So this is a pretty important thing to know if you're trying to, you know, get a certain signal, or you're trying to troubleshoot why you don't have a certain signal. This is looking at essentially a donkey-in channel, which is requiring for this extreme climax, it's requiring that the high be the highest high of the past 30 bars. Okay. So this is looking at the highest high or the lowest low of the past 30 bars. So, you know, if I had a huge wide-ranging bar here with a huge amount of volume that would meet all the other conditions for a climax, it wouldn't give me the climax because it's not the lowest low of the past 30 bars. Okay, which is really not that many bars to require for an extreme climax or a climax. So for instance, the churn bars I have set to typically about between 10 and 20, depending upon the size of the chart. So it has to be, in the case of this chart, at least a 20 bar pullback, which means that the low of the bar has to be the lowest low of the past 20 bars. That just barely made it right there. This churn bar right here. So if I set it to 21 or 22, that churn bar would be filtered out, you see. Okay, so each signal has these different requirements built into it. But one thing you'll notice is that, like right here, you have a churn bar that is not the lowest low or the highest high of the past 20 bars. Why is it allowed? Well, it's allowed because a lot of these 2-bar patterns will end, well, each obviously has to end on a churn bar, but a lot of these 2-bar patterns, for a lot of these 2-bar patterns, the churn bar will not actually be making a higher high, or even the same high, like a double top, 2-bar double top or bottom. So in order to allow those, what I'm doing is allowing the high of that churn bar or low of that churn bar, including the previous bar. So the churn bar has to be the highest high or lowest low of the past 20 bars displaced by a bar. So either the bar itself, the churn bar itself, or the preceding bar has to be the highest high or lowest low. So if you're ever, you know, trying to tweak the properties and trying to figure out, well, why is that allowed when I'm telling it that it has to be the lowest low or highest high? That's why. The churn has that displacement built into it. The climaxes do not. Okay. So I'm going to get through a little bit more, and then I'll take any questions any of you guys have about the climax or the churn or the 2-bar patterns, and then we'll do the volume divergence, and then we'll go through the rules of the template. All right. So 4 climaxes. This is an extreme climax with no density. Actually, there are more, but I don't have the low density climaxes turned on. Mark is saying he remembers had churn bars in the middle of the trend progression. Well, I can't exactly filter all of them out. The ones that I've filtered out would be based on that last rule that I just talked about. So any that are kind of within a tiny little retracement, but not a deep enough retracement. So I don't know if it's actually, me filtering anything out or the fact that this is now relative volume on tick-based charts. And it just kind of does it on its own. I think just because it's more accurate now. So the fact that this does not have a density signal makes it just a straight climax, a straight extreme climax with no density. Okay, and then you have the same thing with the normal climax. So this would be the lowest. This would be the weakest signal. Kind of depends on how you look at it. That's why I'm a little bit hesitant to classify climaxes like this. But let me just say this for a minute. The end of a swing, the way that price reverses, it can happen a few different ways. You can have just a really huge amount of volume rush in at the end of a move, and that would be like a true climax. You get the big, huge rush of volume that takes price up, very quickly into a high. You get that kind of a wide wick at the top, long wick at the top, and then it immediately rejects down out of that, and then it just kind of fizzles out, and price movement gets kind of back to normal, and then it drifts lower. Okay, that would be a really, the proper use of the term, I think, a proper climax. Volume, all the buying just kind of comes in at once, and it pushes price way up, and then the buyers just kind of fizzle out. Okay, or I'm going to say or a few times, but or you could have all of that huge amount of buying come in, price moves very, very quickly into a high, but then stops. It hits a brick wall, and the volume keeps coming in, but price is no longer moving higher. It's just kind of churning back and forth. Okay, that would be more like a high density climax or an extreme density climax, where you're getting that huge amount of buying coming in, but it's immediately it's getting overpowered by resistance, let's say, rather than just naturally fizzling out and extending further and further. That buying is being met with a lot of selling just as much or even more, and then eventually more and more selling that overpowers it and starts taking it back down. Okay? So really fast buying climax where you have a really huge wide-ranging bar, you're very unlikely to see a high-density climax. Let me get a minute chart so I can make this really noticeable here. Yeah, this is perfect. There you go. Yep, that's a true, proper selling climax right there. You see? You'll get a lot more high density and extreme density climax signals on the tick-based charts or much faster minute charts, like a 5-minute faster. You'll see more of those on, like this is a 15-minute or a 30-minute. You'll see more of the true, proper buying and selling climaxes where you get the huge wide-ranging bar with a huge amount of volume, but the bar is such a wide-ranging bar that, when you divide that volume by the range of the bar, you're not really seeing a noticeable increase in density, in volume per range. Okay. But at the end of this, if you then see a churn bar, and in this case, an extreme density churn bar. So it's a huge amount of volume per range. That's a kind of a completed move to the downside. So you've got the big selling climax. It kind of depends on what happens after that, whether it's going to stop and turn back up or not. And if you see this immediately after, then you're probably pretty close to a reversal. Okay, and this is this extreme spike in the volume is the beginning of a potential volume divergence signal. But I don't want to try to cover too much at once. So let's just kind of keep it on the climaxes now. So big selling climax without any density, no high density, no extreme density. And then the next bar, you've got that big churn bar. And in this case, it's extreme density churn bar. So that's number 2 out of 3. Okay. So as far as the climax, the 4 different types of climaxes, like I said, I'm a little hesitant to put them into 4, let's say a degree with 4 increments, 1 through 4, because they just kind of give different information. Sorry, I was fumbling around trying to mute it so I could take a drink. Yeah, it's just completely different information. So for instance, and this is a pretty important thing for you to learn here to understand. So where these bars open and close is what? It's random, right? Well, it's based on a value, but what is that value? The value is random. It's just a fixed period of time. And each bar in this case has the same duration, it's the same number of minutes and seconds, but where that bar opens and closes is, essentially random. So you have to open the bar and you have to close it somewhere. And, because of that, sometimes the bars will be divided up in such a way that it shows that 2-bar pattern or big extreme churn bar or whatever, extreme density climax or whatever it is, very, very well. And then other times that, great looking signal may be split between 3 bars or 2 bars or 4 bars. So it's all a matter of when, at what time the bar is closing, what's the duration of the bar, where it's closing within that high volume move as it's coming to the end of a swing high or low. And then, that's kind of the problem with stocks and commodities analysis in general is getting the right view into the market for the strategy that you're attempting to trade, depending upon whether you're trying to day trade or swing trade or whatnot. So you'll see me with several different charts, like 4 to 6 per market, so that I can look into what's happening per a given market, more so for the volume than anything else. So I'm getting a proper, or at least an even cross section of what's happening for that given market, which is another reason why I use both minute and tick-based charts. So in this case, and all that's to kind of preface what I'm about to say here now. So this is a big selling climax followed by a churn bar. Well, what if that climax actually opened here and then closed here? So what if that climax was taking up, the lower 2/3 of this big selling climax and then encompassing both of those 2 little bars? What would it look like? Well, it may look not quite like this, but similar to something like that, where you get the churn bar sort of built into the climax. And that's essentially what these high density and extreme density signals are. They're sort of like a 2-bar pattern built into the bar, into the same bar. So rather than being spread out, rather than getting that climax followed by a churn bar over 2 bars, it's like it's a climax with a churn bar built into it. Okay, if that makes any sense to you. In this case, it's maybe a bad example because it's actually reversed back up and closed way up off of that low. Let me see if I can find a decent one here. Yeah, this is probably one. I imagine if I split that into, say, a 10-minute chart, I would have a big selling climax here, followed by churn bar. Let's just see if that's even right. July 5th. Man, look at that. Wow. That's about a beautiful 2-bar pattern right there. It's really pretty nice because the climax is actually also a high density climax. So you started really getting the demand coming in on that preceding bar, and then it continued into this bar. So that's a very, very nice looking low there, higher low. So yeah, I imagine the next move will break this high before breaking that low. I would imagine. So that was July 5th. It's another good looking 2-bar pattern there that set up the volume divergence here. I'll come back over that. Yeah, right there. That's my point exactly. It's still a high density climax there though. So before, when it was a 15-minute chart, it was just a high density climax, right? July 5th. And then I split it. So you see what I mean about the cross section of the market and the bars? So you're kind of at the mercy of when you open and close these bars. You don't want to get out of control with it and have 20 charts with the same exact market. But one of the things that I have done is look for, like a specific combination of signals that are occurring on similar time frames that are fairly close together, and then weighting those a little higher, because the signal is so strong that it's actually appearing across a few charts that are similarly sized. Does that make sense? So those would be ones that you would definitely want to favor. But in any case, do you understand what I'm saying here with this? This is it's already a high density climax, but just imagine it's one of these, just a normal climax with normal density, not very high density. And then you've got the extreme density churn bar. Okay, if I could probably divide this up into maybe a 9-minute chart or an 8-minute chart, then this would be just a normal climax. And then you'd have an extreme churn bar. Maybe, potentially. But yeah, that's kind of the separation of the volume and the price action into a 2-bar pattern here, or where you have that 2-bar pattern built into just a slightly larger time frame. And then it shows up as, rather than being a 2-bar pattern, it's now inside, that 2-bar pattern is inside of the same bar, which gives you that high density climax. You understand this a little bit better now? The difference between a climax and a high density climax and a 2-bar pattern. The high density and the extreme climax, like this is a high density climax. It's not an extreme climax because it's not a really huge wide ranging bar. It's just slightly wider than the past 5 or 6, 7, 8 bars. and the volume is pretty high. It's significant, but it's not, it's not crazy high like this one is. So it's just a normal climax, but when you divide it by the range of the bar, and it's a little different again because it's relative density, so it's not a matter of just dividing that by the range, but it does take into account the range separately. But just imagine it, I'm confusing you, but imagine it is dividing the volume by the range, the actual range of the bar. It's such high volume that even when you do divide it by the range of the bar, the density is still much, much higher than the preceding 8 or 10 bars or whatever that is. Okay, so it's like that's a little climax with a churn bar kind of built into it. Does that make sense? That's what a high density or extreme density climax is. It's like there's a little churn bar inside of that bar somewhere. And you would prefer, at a high, you would prefer it to be at the end of the move. Okay? You would prefer the majority of that volume to be up at the top, which is what the typical 2-bar pattern will look like this. Big, huge, wide-ranging climax, followed by a narrow range churn bar up in the top third of the preceding climax bar. That's your kind of favored look to a 2-bar pattern there. So there's a normal climax without any density, and there's your extreme density churn. Okay, if I explained that well enough, we can move on. There's an extreme churn, and there's that one that when I take it down to a 10-minute chart, you can actually see the extreme density churn bar separated out into a new bar. So again, this is why, if you're looking at volume, if you're using volume in your analysis, then you have to use multiple time frames. If you're going to use it effectively, I mean, to just have one chart is to not really get the full picture of what's happening in the volume and the price action. You don't want to have so many that it's debilitating, but you have to have at least a couple to really see what's happening. Now, even if you are swing trading, because the relative volume can display the volume in such a way that's actually beneficial as opposed to what it would look like with raw volume on a larger intraday chart, which is basically useless. That's a pretty nice looking 2-bar pattern right there for the first high or low out of this low. And then another one there before the next big turn up. Not quite as big as this one, but the churn bar is actually much larger. So you had even greater demand coming in there at the end of that low. You had much more aggressive demand, let's say, coming in at the end of that low. Much, much more aggressive than back here. So the range of this bar is quite huge, but so is the volume. The range of this bar is less than half of the preceding bar, but the volume is even higher than the climax bar, and it's closing on its high. So the majority of this volume came in towards the end of the bar, and it was mostly aggressive buying right there. Does this make sense? So what would you say is happening at this low? You've got much more aggressive buyers coming in at this low than and it's kind of hard to think like this in real time sometimes, but you've got way more, noticeably more aggressive buyers coming in right here at this low than you had right there. you've still got a 2-bar pattern, and it's still closing up off of the lows. And it's still, that's a significant 2-bar pattern. That's a pretty awesome look, actually. It's great looking. But the churn bar is much, I can't say much, but it is lower. It's about a third lower than the preceding volume in that climax. Okay, and it's kind of stuck in a range here. So there are still some sellers that are keeping this thing from moving up, and the buyers are probably just kind of taking it easy and not really getting out of control with it. Maybe they're trying to build a larger position and not do as much market order buying. Who knows? And then it kind of drifts sideways to down, makes another low the next morning, and then it starts moving up. But here, at this low, it does come all the way back down to test the low. I have no idea what happened in the overnight there, but you see what happened the next morning. It gapped well above the previous high. The amount of volume at the next major low or high is oftentimes a very good indication of the strength of the move in the opposite direction. That's why a lot of the V-tops and bottoms that I'll buy or sell in the trading room will be, say on a 5-minute chart, it'll look exactly like that, just like that. Huge amount of volume, very wide-ranging bar, followed by a very high-volume churn bar. So those are the ones that I'll look for to expect the V bottom or the V top out of. When you get this, really huge, fast snapback inside of the previous trend, maybe taking out a tiny little previous low, but not taking out any major previous lows. It's not an obvious stop run or something. You can't assume that a lot of this volume is just stops getting run because you took out a major high or low. So it's a significant sort of a climax, but it's a selling climax within an uptrend. And you haven't taken out any previous lows, and it's a huge amount of volume. A lot of V tops, in this case V bottoms, will look just like that, where it puts in this huge climax followed by a huge amount of volume. It keeps the price from moving any lower, closes up off of a low, and then you just kind of go in a straight line oftentimes, at least on a 5-minute chart. On these larger charts, it's a little different story, but yeah, on a 5-minute or a 2-minute, oftentimes it'll go right back up just as fast as it came down into that low. And this is one of the things that I look for. So for a low like this, whereas normally I'm looking for volume divergence on, say, the consecutively faster charts, I wouldn't be looking for volume divergence for this type of a low on a 5-minute. So if this were the 5-minute chart and I'm buying this, I wouldn't be requiring any kind of momentum divergence or volume divergence on the faster charts at all. I would just be buying that pure and simple from the area that I'm trading. Does that make sense? Let me see. It's right at the bottom of that little channel there. But yeah, so volume, pretty important. Pretty important. I mean, it's what kind of creates price. But if you don't get that 2-bar pattern, depending upon the move that you're in, the trend that you're in, depending upon where you're at in the trend, will determine, what it is that you're looking for. Are you looking for volume divergence on the 5-minute chart to confirm a swing low where you're making the lowest low of the past 5 years? You think that major reversal is going to occur on just a simple volume divergence on the 5-minute? Probably not. But on a daily chart, maybe even a 240-minute, if you start getting volume divergence in a multi-year low, then you need to start thinking about, maybe it's starting to put in a major low that will begin turning up from. But say you've been moving up like this for just say for the past 2 weeks, you've been moving up in a straight line, and then you pull down hard for 3, 4, 5 days, and then you actually get volume divergence at a swing low on your 15-minute, and you've got between, say, 30 and 100 bars that make up that swing down. And then you actually get volume divergence on that chart. Well, then then you're looking for the end of a correction, the end of a retracement. So depending upon where you're at in the trend or the correction and how large of a correction it is, which is what I talk about in some of those videos on the website, where I'm talking about the operative time frame, looking for how many bars have made up the correction, so you can kind of determine which chart will end up having the signals and the volume. So you've got to have enough bars within the swing to get the signals out of the volume for those bars. If you've only got a 4 or 5 bar pullback, well, you're probably not going to find the end of that pullback unless you have a chart that shows that pullback and say, at least 15 or 20 bars, preferably between 30 and 100. So that's where, understanding what trend you're in, where you're at in the move, where you're at in the retracement of the trend, if you're in a retracement, and which charts you should be using to kind of confirm what's happening. That's where that becomes pretty important. And that's another reason for having the multiple time frames, is to divide the market up into sections where you're looking at, for instance, here, if I'm assuming this is a major swing low and it's kind of looking like it is, yesterday we closed up above this high, or well, we broke it anyway. I don't know if we actually closed above it. No, we didn't. And then, straight shot move up. Well, then I'm looking for a higher low today, and then to go up and break that high. After that, I really have no idea. You can try to project with Elliott waves if you want, but really at any given time, you can only safely try to project about a swing or two at a time. And that's about it. I mean, people say, you want to be reactive. You don't want to try to predict. You just want to react. Well, nah, I would completely disagree with that. If you don't have any idea of what to expect, everything that we're doing is pattern recognition, right? So if your patterns that you're using to trade with don't have any sort of predictive ability, like if you have that's what a winning trading system is doing, right? It has an edge, which is knowing the probability that X is going to happen over Y, meaning that having a higher probability than 0.5, basically 0.51 or greater, that the market will move up instead of down. And knowing that and being able to execute that, that's an edge. And that, by nature is a sort of predictability. So to think that you can't be predictive at all or anticipate what the market is going to do, people that truly believe that, I don't understand why they're even trading. It doesn't make any sense. It's not logical. But anyway, as far as prediction goes, you got about one swing or so that you can safely expect. And when the market looks like this, typically, where it's just a straight shot within a trend and you're kind of correcting that, more often than not, you've got one more. So if I bought this low and I really have I just wasn't watching it, but if I would have been watching it, we'll kind of go over it and see what's lining up there, but I imagine it's probably pretty beautiful. But if I bought that, I would be expecting one more high, and for it to trace out something similar, not identical obviously, but something similar to what it did going into the correction. So tend to kind of go out in a similar fashion the way that you came in. But beyond that, I mean, I wouldn't necessarily be holding for a break of this high. I would just be looking to get above that high, maybe to the top of the next channel, and then beyond that, wait for the next setup. So that's a little primer on some of the signals. We'll go into the volume divergence a little bit as we're getting into the templates here, but because of the fact that at this low, we had a really nice volume divergence on this 15-minute chart, and then we get the move straight up like that out of it. Kind of interesting that it came right back into that high. Well, like I said, at least a break of this high, probably breaking this high. But that's a pretty significant swing low here on volume divergence on a 15-minute chart that hasn't broken the major low. So this is the first big higher low. I mean, you've got a couple little ones here, smaller ones, relative to this chart, that is. But at the end of this one, at the end of this major correction down, or whatever you want to call it, you've got that really nice volume divergence pattern that we took off straight up to the upside out of right here. Okay, so when you see something like that at the end of a corrective move, what looks like a corrective move at the time, you're typically thinking get all the way back up the end of the swing that went into it, essentially. Okay, like at this high, the end of the swing that went into it, it's arguable, but this is a little bit different because it's more at the end of a little bit larger move, and it's already got a correction in here. But typically, you'll at least, out of a volume divergence signal, you'll at least, I shouldn't say at least, because I mean, everything that I'm saying is always it's a probabilities thing. And I can't tell you for a fact that it will do this 75% of the time. You ever hear people say, yeah, every time this happens, every time this is what happens, every time. That's just garbage. It's just ridiculous. Doesn't work like that. So, if you ever hear me sounding like I'm being very matter of fact, in my mind, I'm really not, because none of this is set in stone. It's it's a matter of figuring out when one thing is more likely to happen over another, and that's really the best you can do. I think everybody knows that by now, but anyway, you've got this big volume divergence here. That's actually a pretty decent looking volume divergence. You just don't have on this chart, on the actual volume divergence chart, you don't have the signal at the end of the move. Okay, but on, say, the 5-minute, this is probably a 2-bar pattern in there or something, or on the 2 or 3 minute or whatever. But you'll, more often than not, if it's a pretty great looking volume divergence signal and not just some, mediocre looking thing, and this is a great one where you've got wide ranging high volume bars in, a proper climax here, and then the sign of weakness at the high, down from the high. So it's attempted to move lower once already, failed, and went back up to a new high, but it didn't go back up to that new high on very high volume. It's actually not very high at all. So that's a proper volume divergence there. You'll more often than not break that previous low, and then depending upon the swing going into it, you make it all the way back to the starting point. So in this case, it's a little bit hard to tell because the majority of this volume was to the downside there, not to the upside. So this is kind of a weird, I don't know, maybe that was a report or something. Looks like a crude report. Yeah, it was Wednesday, 25th. Yeah, so that's crude report. So that's a little bit different. So maybe you could potentially expect to come down and break that low. But beyond that, yeah, so you came down near it, but you didn't break it. So anyway, that's kind of volume divergence. The idea for it would be from Elliott wave analysis. So in Elliott wave, at the ends of some of those swings, like the end of the first wave, end of the third wave, end of the fifth wave, they try to identify certain characteristics, like what happens at the end of a fifth wave more often than not. What would you expect? Well, one of the things is lower volume at the end of the fifth wave than you have at the end of the third wave. So once I started working with the relative volume and really kind of detailing out the specs of the bar conditions and all that stuff, and then noticing that I'd get these really awesome climaxes and churns, but then you'd get a retracement, and then you'd actually go down and break that low, but that next break would be the final low. Then after having developed that divergence algorithm for the Divergences Pro, we adapted that, but it's kind of a completely different bag altogether. But it was easier to spec out because I had already spec'd out the Divergences Pro indicator. So this we added in at first using Bloodhound templates, and then once I could actually afford to hire a proper developer for this, then we custom coded it all. So this volume divergence is one of the major ending patterns that we look for. So the fact that here at the end of this volume divergence, you actually have a high density climax bar with only, say, 10 or 12 bars between the starting and ending swing, that makes the volume divergence pattern much more significant. So for me, I would say that, yeah, you're on the verge of almost to the point being not allowed as a volume divergence signal, because probably another 5 or 10%, and that would have been canceled because it's not actually lower than back here. But because of the fact that it closed up off of that low and it's a high density signal, if it were just a climax and not a high density, I would say this is not a very good signal. I would actually say that it's not as good as this one that doesn't have any signal at the end of it. But because that is high density and it's closing up off of the low, that's an even stronger sign that, yeah, you've had the selling climax, you've had the sign of strength, but once we broke that low, you actually got a lot of volume back into the upside that stopped the selling in its tracks, and then started working it back up a little bit. So that's a very good sign, seeing high density at the end of a volume divergence setup. Okay, so this is one of the things that we're looking for in the template. So basically, I'm going through the signals that make up the Bloodhound template. If that wasn't obvious. And now that we have the relative volume on tick charts, we're able to get some of these kinds of 2-bar patterns, which wouldn't necessarily have been able to get before. Yeah, that's pretty awesome. 850% on the climax, which is huge, and then 1200% at the end of that 2-bar pattern, and it's actually extreme density, extreme churn. So it's a really tight, narrow range with a huge amount of volume and volume per range. So that's the kind of 2-bar pattern you'd really like to see every time, but that's a pretty good one too there, actually. Not nearly as high, but it's a good look to it right there. Wide-ranging high-volume bar actually started off as a high-density climax. So you've already got demand coming in on that bar. Do you understand what I'm saying by that? If it's got high density and it's a climax, then you had to have run into demand. Why do I know that? Why is that a given? Even though it's a down bar, how can I say you've hit demand there? Why is that? Who knows? Who knows? Because Daniel says so. Right. Well, yeah, I mean, that's kind of the result. But it's, if you didn't have the high density with the same amount of volume, that bar would be probably about twice as long. Okay. That bar would be way, way lower. Yeah, exactly. So the fact that it's still a slightly wide, well, it's fairly wide ranging bar. It's wider than the past 6 bars. But yeah, if it didn't have high density, then the same amount of volume, that bar would be quite a bit wider ranging. So anytime you've got a high density, anytime you have high density or extreme density at all, if you're going down into a low, you've hit some demand. You've at least hit some demand. That doesn't necessarily mean that it's going to turn right up. It depends on, the price, where it's at in the structure, where, have you hit the major areas in the market geometry? Where are you at in the trend or the retracement? If you see it at a high, then you've hit supply, high supply, low demand. Doesn't necessarily mean it's going to turn, but you've got a much better chance of it actually doing so when you've hit obvious supply at a high or demand at a low. And that's a pretty nice looking little deal right there, huh? And that would be kind of the ultimate end of a correction right there. It doesn't really get much better than that, where you've got, it's almost picture perfect. Well, it is picture perfect. So that's a selling climax here. It's an extreme density, extreme climax. So it's not a terribly huge wide ranging bar, but it is a tick chart. So you wouldn't expect the variation between the bars to be that noticeable. Tick charts are not going to vary from one bar to the next as much as a minute chart would. But what happened here? You've got the big selling climax. Excuse me. I'm going to have to break and get some water here in a second. And then it closes up off of the low. So a lot of that is already demand coming in. It's extreme density. So it's huge volume, but it's such high volume that when you divide it by the range, it's even large. It's exceptionally high volume per range. Then you get the sign of strength. And you come back, test that low, break it, lower volume, very high density, closing back up off the low, volume divergence. It's a high density churn at the end of a volume divergence setup right there. And that's a really nice looking volume divergence. It's about half, 250. Yeah, little more than half as big as this bar. So that's a really good little volume divergence. Volume divergence you tend to kind of expect at the end of a trend, but when you get these, it's always nice, but you can't safely expect that you're going to get volume divergence at the end of these corrections. I mean, if this correction started at the previous high before the highest high, let's say it started there, you've only got 61 bars there. So you couldn't really safely expect there to be, volume divergence to end that move. If you waited for that every time, then you would miss way more moves than you would actually catch. That's always a pretty nice thing to see in your favor.